Welcome to another episode of the Weekly Crypto Check-In, recorded on May the 29th, 2024. I'm your host, Robert Swarthout. I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Good, Robert. Just kind of getting steamy hot here in Atlanta over the last week. We had a great Memorial Day weekend, and it wouldn't be too bad to be out in the Tetons about right now. A little cooler weather.
Yes. I got a thing on my computer here. It's 57 out that way, and it's 80 here in Atlanta with obviously very different humidity. So couldn't be much different.
But it's been a busy week since our last update.
Yeah, we were talking right before we started here about how, a lot of times in the summers of crypto are kind of, unless it's a bull market, which can be different, but usually the summers are quiet, and it is not the case right now. It is fast and heavy news cycle right now. So we probably should just jump right in the spirit of kind of continuing a theme we basically talked about the entire time, Bitcoin ETFs. This one was inevitable. The iShares BlackRock ETF for Bitcoin IBIT surpassed the Grayscale GBTC for assets under management, and it did it I think just at or just under 90 trading days. Not surprising. The fees couldn't be any different on these. There's the investors in the Grayscale one were jumping ship. It's a 1.5% fee versus 0.2 or 0.21 for the iShare. So, the graphs are basically mirror opposites of each other. So
yeah, I wore my red in solidarity.
Yes.
Not that the performance is dramatically different, but yes, when it comes to index products, there's a lot of innovation still, but obviously people are generally going to the index for something that's easier, something that's lower cost, something that they can get, probably in this case from an even bigger, well-known asset manager. So not terribly surprising news. It's just, hard to supplant the marketing branding size of a BlackRock.
Right. And,
not to mention the product and the fees.
Right. And at the end of the day, they're selling the same thing. I mean, there's outside of the fees and maybe the way that they do custody, which most people aren't going to understand those nuances. They're selling exactly the same thing. So fees do matter at that point. So,
yeah, it'll be interesting to see how long some of these other offerings or products that are effectively doing the same thing. And especially as we get into the conversation today, like as we see more index proliferation, we're going to talk about Ethereum, like how many of these shops are going to be willing to, hang around if they're the fifth or sixth or seventh largest, provider.
It will be interesting. There's not tons to differentiate on the product. Maybe once you get towards further versions of ETFs that have other things like a cash flow component potentially, but right now it's pretty boring stuff that they're selling. So,
yeah.
So talk about selling or versus, I guess, the opposite side of buying. So the kind of random piece of news that I found a little entertaining was the Trump's wallet that he sold his NFTs out of. He had an NFT series he sold a year or so ago. I didn't follow it all that close, but that same Ethereum address, so that same wallet, made its first ever crypto purchase, and he bought, or the wallet, assuming it was him, he bought $500,000 worth of Ethereum, so roughly 50 Ethereum, 50 full Ethereum. So it's I don't know, interesting. He's been very pro crypto the last, call it 3 or 4 weeks. In the past, he's been anti-Bitcoin. He's kind of followed the Jamie Dimon model of I'm for it, I'm against it.
Right. Well, I know, and we're not going to do politics every week, but we are in the political season. You're wearing blue, kind of light blue. I'm wearing red. We're not making a political statement, but it is interesting that we're talking about this because, there was such a uproar in Congress around the disclosure of some of the, folks in the House and Senate's holdings when it came to public stocks. And I'm really curious, because crypto is so transparent and decentralized, I'm really curious as more and more of the discussion around legislation makes its way through now the Senate. And we're going to talk about the FIT 21 bill, but like, what is the ownership in in DC look like on Capitol Hill?
Yeah, it will be interesting to see. It's not likely that we'll find out their actual wallet addresses, so we can't follow it too closely.
Sure.
Whenever they do their disclosures, there's those big brackets that things fall into. So I certainly know that Senator Loomis from Wyoming has disclosed that she owns Bitcoin. And then she talks about the number. I don't remember it offhand, but it's a rather small percentage of Congress that has, I think, reported owning any actual crypto of any kind. So
right. And for a long time there's been conversation around, well, they shouldn't be able to, they being elected officials, shouldn't be able to own single stocks. They should have to divest and own indexes and for example, mutual funds. Well, in the case of crypto, like there's now one token indexes. I think that's going to evolve over time, but yeah, it's just gonna be something to watch.
Yep. So this
has got to be one of your favorite headlines.
I was kind of shocked when I read this. The third topic here, the SEC was ordered to pay $1.8 million damages to DebtBox. DebtBox was the case that we've referenced a few times that happened last fall, where the SEC was trying to prove that they should have these fines and penalties and all this kind of stuff. And the ruling was that for there to be disgorgement, the people actually had to lose money. Like if you made money in the process, like what are we really fighting over here? And which has turned to help. Well, Ripple's using that point in their case with the SEC. So it's kind of coming back around to the SEC pretty quickly. Yeah. And what the SEC did in this DebtBox case is they lied to the judge. And they had the ability to come clean. They didn't. They doubled down. We've gone over all that. So I still can't believe that the court did this. I'm happy to see it. I saw, I think it was Pat Toomey or one of the senators tweeting that, kind of referencing this $1.8 million damage that they have to pay, that this is how we're supposed to be spending taxpayers' dollars. A bit of a jab. He's always jabbing Gary, but point is made here that maybe they certainly went over the line, and also they're getting in trouble yet again for it. So,
I know you followed this particular DebtBox case closely. Does the SEC just pay this fine, and it's kind of yesterday's headline, or do you think this appeal process plays out? And
I don't know if this is appealable. That's a great question. I'm not an attorney. I don't know if it's a fine, because it's truly a fine that the court ordered against the SEC.
Yeah.
Most things are appealable at some level, so maybe.
Maybe the fine isn't. That's interesting. So they're going to have to cough up a couple $1 million in damages for effectively overreach and lying to the court.
Right. So, admittedly, I don't really want to follow this one anymore. If news pops up in my feed, great. But I am ready to move on from these SEC lawsuits in general.
Well, you don't see these types of headlines often, so there is some accountability out there. Yeah,
absolutely. It felt like the judges have been holding the SEC accountable, but this, in some ways, goes even a step further. Actually, monetary damages and a fine. $1.8 million is nothing to what the SEC typically is trying to get the other direction. So, we'll see. Maybe some of the fine money is getting paid back to DebtBox for attorney's fees. I don't know. I didn't really dive into the details, but it was entertaining nonetheless. So, jumping back on the ETF bandwagon here. So we recorded last Wednesday, and by Wednesday, we finished recording around 2:00 Eastern time. By 5:30 p.m., so 3.5 hours later, the SEC had conditionally approved 8 Ethereum ETFs. So, we thought it was going to happen after the call last week. 2 weeks ago, we had thought there was no chance this was happening. This is a big change again. And, again, they're conditionally approved. I think it's like a 19B form was approved. The S ones have not. They've kind of worked through some details. We might see trading starting roughly in 2 weeks is kind of what I've read. But it's, again, surprising.
Yeah. I mean, like you said at the very beginning of our check-in, the summer sometimes in the market can be synonymous with, it's quiet. And, there's obviously activity, when it comes to crypto, it's 24/7, right?
Right.
So, yeah, one of the things that I think we have seen a trend over the last 3 to 6 months is there is a lot more movement in DC. There's a lot more movement on the regulatory front,
Mhm.
and particularly when you think about the indexes and these issuers behind the ETFs. And you've said this for several years, like when the institutional machine wakes up and recognizes the opportunity and starts
Mhm.
to say, we want to do crypto, we want to do digital assets, you're going to start to see things happen.
Mhm.
And it now you can look at multiple outlets, both financial press and mainstream press, and see headlines like voters are now crypto voters,
Mhm.
and it's
Right.
like all
Yeah.
of a sudden the discussion is shifted. And I think that these ETFs getting approved, while not a
Mhm.
political issue per se, it's part of this broader backdrop narrative that
Right.
the
Yeah. I
train
mean,
has
it's
left the station.
mhm.
And if you didn't think that was the case, then Bitcoin ETFs were approved. And now we have
Mhm.
Ethereum. The
Right.
bigger question you and I think talked about before we went on is, Bitcoin is an easier pitch
Mhm.
to the everyday investor. It's
Right.
digital gold, right?
Yep.
The question becomes, if these are approved and start to trade in the next several weeks or month, what is the pitch on Ethereum to the everyday guy or gal that wants to go buy Ethereum? What
I
is that
mean,
same PR branding message?
there's functioning. I mean, I've heard it's the world's internet computer,
Yeah,
um,
an
but
app
that
store
still
for
doesn't mean
crypto.
anything to anybody.
Yeah,
When you it can run a DApp. Well, what is a DApp? Like this turns into a 5-minute conversation. It's not a 30-second elevator pitch that Bitcoin
right.
gets to enjoy. And obviously it hasn't been around as long as Bitcoin, but even still, there's more people that are working for things that run on Ethereum than there is Bitcoin, and we still
Right.
don't have a good elevator pitch.
Right.
Um,
And there's gonna be no staking with the Ethereum, is that right?
correct.
When it
That
begins
well,
trading.
there is staking with like if you hold like raw Ethereum
Right.
in your own wallet, you can do that. But if you are going to buy it through these ETFs, they're not allowing staking. I don't know if they're going to be allowed to add it later. I think that maybe the SEC is kind of like saying, "Oh, we're going to give you your ETF, but we're not giving it all to you." It does
Yeah.
get more complex for sure, and I
Yeah.
think that we talked about it. It could be like considered a cash flow component if it's allowed in the future. Does give some yield there, but we um, we will not get that out of the gate. Which
Yeah.
rather have something than nothing at all. I guess is maybe my stance in this one.
Well, I mean, look, we are not in the prediction business, but in the crypto check-in, I think another sort of sub headline to these approvals is, Bloomberg's ETF analysts, are sort of on the beat talking about this stuff
Yeah.
on a regular basis. And I think I saw one prediction that the Bloomberg analyst Eric Balkunas, we need to find out if that's how we pronounce his name, but I think that's close. But he
Yeah.
predicted that there could be between 10 and 15% adoption
Mhm.
in terms of the amount of flows
Relative to Bitcoin.
relative to
Yeah.
the current market cap of the BTC ETFs. And
Yes.
so
Right.
currently, as of last week, that was around $13 billion,
Mhm.
which if you took the high range of 15% of that, it's not a ton of capital. And the question is this a retail investor like that early adopter of the Bitcoin ETFs? Is it the financial professional that's
Yeah.
representing the advisor? Because I think some of these platforms, wirehouses, private banks, and others, I don't know that they've even approved Bitcoin
Correct.
ETFs unless
Yeah.
it's reverse inquiry. So now you have another product that could start trading in June or July. I mean, I wonder how quick
Mhm.
those firms will be to adopt, much less to understand how it works.
Right. I mean, they're certainly going to have the marketing department give 'em a good flyer.
Yeah.
Like, so I was just quickly looking up. So, when he said 10 to 15%, it doesn't seem too far off. But if you look at the market caps of those two, Bitcoin and Ethereum, so Bitcoin is currently at like 1.32 trillion and Ethereum is 452 billion. So call it roughly if it's closer to 20-25%, I think maybe the higher end for Ethereum, even if it kind of got that high. So
yeah,
it wouldn't surprise me over time if those ratios kind of are more in sync with each other. When you're looking at if you only can hold those two over time, we're going to have more ETFs and it become more blended. But it's a interesting world.
Yeah, I want to ask you before we go to these last three bullets on the ETF. You're in the markets every day, Robert, and I'm curious what your take is on what will be the what do you think will be the market's reaction to these 8 new ETFs being approved? And I mean the investor market. What do you think the interest level will be relative to? I guess the only other comp would be Bitcoin at this point.
Right. If you're comparing it to what happened in January for Bitcoin with that launch in the lead up to it, yes, Ethereum's up a little bit since the news last week, but like nothing like Bitcoin would have been on that same type news. I think it's going to be a bit of a sleeper, admittedly. Kind of going back to what we originally said is like, what's the sales pitch for these things? Like, yes, you want exposure and you want to diversify, but outside of, and that's what most people would get. Outside of that, and you start talking crypto stuff, good luck.
Yeah.
So
and it wouldn't be the only index product created by one of these issuers that does take a while for flows to really start to look more material. I mean, a lot of these ETFs launch and they have a fairly narrow following, and then over time, just take AI, like anything AI related right now over the last year or two is probably thematically like a pretty popular ETF to get that kind of tactical exposure. If you'd have asked for an AI ETF 4 or 5 years ago, people might have thought, go to the science fair, like we're trying to make money here. So it'll be interesting to see what happens. But this third to the last one, the Fit 21, this is a meaningful update in terms of when you break down the support. It was bipartisan, and now this bill, which effectively, how would you summarize it? Is I guess my first question.
So how to summarize what
the bill, like the purpose of the bill?
Yeah, it puts market structures in place for helping define certain keywords that the current securities laws don't define. And the SEC is trying to shoehorn crypto into those old ones. Is admittedly, I think, the biggest trouble.
Does it give the SEC more clarity around what's a security and what isn't then? Or more power to
I believe there is some things there, but I think more specifically what it's doing is it's more carving out what crypto could be elsewhere than trying to keep it in the current framework. I think it's trying to play off of the laws that are in place now. It's not trying to create a whole new vertical for it, but it's it's early days. So I did read that there's some stuff that does need fixed in it. There's some terminology, there's maybe some definitions that could be tweaked. So it passed the House, it would go to the Senate. If the Senate makes those changes, it turns around and has to come back to the House for revote.
Right.
And then we go to the potentially the president. Consensus, the conference is happening right now, and there is a I forget which senator or some government representative, House rep or a senator is up there, and he was saying how, I think it may be Pat Toomey, by the way, but he had said that if we kind of go through that process that I described, it is probably going to the president's desk potentially during the lame duck session, assuming there's a new president coming in, or there's obviously some Senate and House seats moving. So it could take a while. As quickly as this moved, it feels like it's going to happen next week, but certainly is not going to be the case. But it's interesting to kind of see how it's playing out. And, these are moments that, maybe not this time around, but other times I've gotten to learn kind of how Congress works again. Like, the
you're back to civics and government class.
Exactly. And maybe actually care about it this time and learn something. So,
What are you suggesting? You weren't paying attention?
I'm suggesting I don't remember.
Yeah, it's been a while for both of us. So we talked about this last time, but now we have some more numbers around this, and the bullet point right below the U.S. House passing Fit 21. No shocker. Yeah. There's a crypto super PAC. Announced they raised another 25 million, which brings their total for this particular super PAC to 110 million to date.
Yeah.
Who do we have to thank for that $25 million check?
That is a second $25 million check from Ripple.
Okay.
So they Ripple is, as a company, is doing well. They're a private company.
Yeah.
But they, Brad Garlinghouse, the CEO, is quoted as saying, "This is not a one-time thing," or "This was not a one-time thing." So I don't know if that means potentially there's more coming later. But the crypto industry as a whole is kind of feeling itself right now, right? I mean, the last month and a half, with all this stuff with SOB 121, and then like this Fit 21 thing, the ETFs, the Bitcoin, like there's some momentum, and they're trying to build upon that. And being a political season, the way you're going to do that is spend some money on
money. Yeah.
So it's good. Immediately, I'm happy to see these companies stepping up that have the capacity to do this, because quite honestly, you're not going to get meaningful dollars out of Joe on the street. It's going to have to come from the companies, and the super PACs are the way the country currently does it. So
is the
name? Yeah. So Coinbase was another one that was included. There's, I don't know, 6 or 7 other companies.
Some bigger ones.
Yeah.
That makes a lot of sense. And we know that like these super PACs now have a lot of influence. They have the ear of not only the lobbyists, but also the congressional aides. They can get information in the hands of lawmakers and at least raise the issue to one where folks are noting it. And when they're going on the campaign trail, they're making sure to insert that talking point or two that speaks to the issue, right? And so whether this is a crypto voter or not, you got to think in these competitive races up and down the ticket, you're going to start hearing more about crypto and digital assets. And, at some point I would imagine taxes and other things that start to play a role as we get closer to November. Anything else on the political front or on the legislative front over the last week that caught your ear or caught your eye?
I don't think anything's coming to mind. Admittedly, there's a lot that's happened. I don't know if I hope that every week is this fruitful. Maybe once we get regulation, then I'll be fine with it going to zero. But right now, maybe they can keep up the steam and keep surprising us in a positive way. It'd be great.
Well, the fact that you have a lot of these digital asset and crypto conferences kick off around this time of year. So Consensus, as you mentioned, is going on right now. I think there's another big digital assets conference coming up in Austin in early June. And when you look at who's speaking and we look at who's accepting invites to speak, there's a lot more politicians this year than there were 2 years ago. Absolutely. So there are people that want to get their message out. There are people that want to be looked at and viewed as pro crypto. And so I think that we've seen that shift taking place over the last 18 months, but really over the last 6 months. So it's becoming more of a retail asset class as these ETFs are making it, click and buy, and people like the easy button, as I've always said.
Yes, I'm sure. Which maybe brings us to our last topic here. So crypto startup funding from VCs hit 2.4 billion. I think that was like Q1 or
that's 2.4 billion in Q1 of 2024, which is up, according to PitchBook data, up 40% from Q4 of 2023. So, there's not a lot of details about the funds that were raised. Speculation and reporting is that the majority of these funds that were raised, of the 2.425, are going into early stage venture, or what's called crypto VC. And I think you and I might have some theories about that, because we spent time with a lot of these bigger asset owners and institutional investors, and it just felt like a lot of them, when we talked to them a couple of years ago, were like, do you also run a crypto VC strategy? Like, do you
Right.
also invest in projects? And I guess part of that is just the notion of kind of like venture being early, and maybe their association, they being these investors association, that we're in such a early stage of this whole cycle and ecosystem that
Hmm.
they want to make bets and place bets in the project level, which you
Right.
can argue maybe is too early.
Right.
But the other way to do it would be to, deploy capital into tokens, which are actively traded. So,
Right.
and then there's a whole bunch of stuff in between.
Yeah. It's, one's not right and the other's wrong at the same time. I mean, like the both
Yeah.
can be right, they both can be wrong. At the end of the day, like it's just, I think people are more comfortable with the VC. I mean, that's what
Yeah.
they've done
Familiar
for
with it.
probably their whole career.
Yeah.
To and you start seeing the, the way that I might describe Teton from time to time is it's a PE style research process married with the liquidity of something that's actively traded,
Yeah.
but in projects that might sometimes fit a VC's time horizon, like the early stage VC. So it's kind of a hybrid of sorts. But at the end of the day, it is it's new, and sometimes people get uncomfortable with things that are new, whether they're good or bad.
Yeah.
And I think that the people will slowly come around. But investing in picks and shovels is a time-tested strategy to good returns if you can pick the right markets or right locations. So
Yeah, I mean, some of the analysts that when you read about this amount of capital that's raised, because 40% can be, it can be looked at through a couple of different lenses. This is a very small amount of money
mhm,
relative to the broader venture space, which
yeah,
has been through a tough, couple of years. Fundraising has been very difficult overall for early stage venture. And part of that is because valuations are down.
mm,
Valuations are down because exits are down. Exits are
right,
down because there's less of an M&A market,
yeah,
with the exception of energy, which has been super hot. And we seem to be seeing tons of activity there in the oil and gas space. But
mhm,
in terms of venture, let's say the 2.5 billion, most of that's probably going into early stage venture.
right,
And most of that early stage venture are probably folks that are going to be investing in a lot of the same types of projects. So
mhm,
the AI angle on crypto,
right,
the language model angle on crypto, for example, gets talked a lot about. And to your point, I think a lot of LPs, investors, are just more familiar with venture. They're more
mhm,
familiar with that and putting it in an allocation, in a portfolio, in a bucket. And the idea of owning something that has volatility, you know, or can
mhm,
swing from a price perspective,
right,
um, for them is they haven't yet gotten their risk model or their models overall
mm,
around that. I equate it to like micro cap, small cap stocks
mhm,
versus like the mega caps.
right,
Um,
yeah.
and and so it's going to be time, to me, that's going to allow investors to get more comfortable with that.
Yeah, it's been fascinating to me as I think about this VC when it comes to crypto is a rather volatile market, right? I mean, that's one of the things it's known for. VCs love to mark things up, but they don't like marking things down.
That's right.
So it's just kind of like this dichotomy that's happening. Like, is one representative or the other or not? I don't know. It. I'm not invested in any VC style funds that are crypto focused, but I'm sure they like those markups. But the fund is probably not accurately marked all the time. Would be my guess. So.
Yeah, there's definitely a process all of them need to follow or have to follow.
Mhm.
Yeah, it begs the question. I would think that so much of this venture investing at the early stage comes down to like some of the same variables, though. Like, who are you backing? What's the
Mhm.
traction? What's the
Right.
process? What's the exit? What's the liquidity? If there's going to be some kind of token issuance, etc. So more to follow. But I mean, it's just been a really kind of abnormal last few months in
Right.
terms of the busyness of the space.
Mhm.
So you can't run off to the mountains or the beach or the lake this summer because we got to do
Yeah.
crypto updates.
Yeah. Well, we'll keep at it. So
Yeah,
that's
yeah.
awesome. Well, thanks for joining us on this episode of the weekly crypto check-in. If you want to stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the weekly crypto check-in. Take care.